Hi there, I'm Will of the People. I want to show you how Wall Street actually ripped off you, your parents, grandparents, friends, neighbors, trust funds, school districts, cities, states, and counties, not only here in America but all over the world, out of trillions of dollars. It was actually a very clever scheme that was enabled by the politicians and judges by changing the rules after Wall Street paid billions of dollars to lobbyists to bribe the politicians to change the rules and appoint judges who would rule in their favor and enable them to pull this off. And they're still doing it. It's very important for people to understand they really haven't changed the rules. They're still intact, and now they've been giving money to the bankers who ripped us off in the first place. And it's not an accident that the politicians and judges own a lot of stock in these banks. And that's why they haven't put them in receivership. Now, I want to point out something that's very important. Not only is it still happening, but throughout history, every nation in history has collapsed because of collaboration between the politicians, judges, and the money changers ripping off we the people. And that's how they've destroyed their currencies and economies, and we the people always get the shaft. Now, here's the truth. If we the people understand how they do it, then we can stop it. And so this example is to show you and anyone else how it's done, and you don't have to be an economist or a financial expert. It's very simple. Now, you won't hear this from the politicians, judges, or the bankers, or the corporate media, because they don't want you to know. The media won't tell you because they don't want to lose their big fat paychecks from their corporate employers. So only very few journalists will, if they were able to uncover this, would they tell you. That said, remember 2,000 years ago, one man rioted against the money changers, and they had him arrested and crucified. Now, the difference is that if all the people understand this, then we'll see the remedy and we'll stop it. And we can change history forever. Now, that said, I'm going to get started here. What the money changers figured out is, after changing the rules to play this game, all they needed to do was get people to go out and find people to borrow money. So now, to keep this simple, what I'm going to do is I'm going to say they would lend money, and they would find people to borrow money, and we're going to say at 10% interest. Well, when somebody borrows money at 10%, that means they'll pay 10 cents a year in interest. So I'm going to put 2 nickels there to represent the 10 cents. Now, the borrowers, they would have the borrowers sign a note, and it's, a note is a form of an IOU contract saying that they'll pay back the money they borrowed plus the interest. And they would send the note to the money changers, who would then put the note in a package and go to the next step. Now, what they would do is they would go to their bond rating agencies, credit rating agencies, and they'd say, hey, we've got a note in here for 10%, and we want to sell 5% bonds, and we want you to rate them as high as possible, as high as AAA, which means no risk, so that we can sell the bonds. So the bond rating agencies would go along with it for the big fat fees they're going to get paid, and they'd put a little ribbon on the package and say the bonds were really good and safe, and the notes inside were safe. And it's kind of like putting lipstick on a pig. Now, the next phase of the game is that the Wall Street money changers would then print bonds. And, bonds are just contracts, guarantees for loans from secondary lenders to the issuers of the bonds. That's all they are. So they would go to the secondary lenders, who are money market funds, bond funds, pension funds, retirement funds, and all that kind of stuff, where people like you and your parents and grandparents put your money, especially when banks pay very, very low interest rates, and you can get a lot more in a money market fund. So that said, they would print up these bonds, and we'll call them 5% sucker bonds. Now, what they would do is they'd sell the bonds to the secondary lenders managing your money. And those lenders would pay by two bonds, two $1 bonds, paying 5% to get those 2 nickels. So they'd pay the money changers $2 for 2 $1 sucker bonds paying 5% backed by a $1 note. The effect for the money changers is they got their dollar back, which they could turn around and relend again, plus they made 100% profit, not 10%. Get it? And they would do this over and over again several times a year. So they'd put that 100% profit in the kitty and lend the dollar back and just keep doing this over and over again. Now, we've all heard of people borrowing money at higher rates, like on credit cards and adjustable rate loans. And so we use the number 15%. So when a borrower borrows $1 at 15%, they're agreeing to pay 15 cents a year in interest, and then the money market funds and retirement funds would turn around and buy 3 $1 sucker bonds paying 5%, and they'd give the money changers $3. They'd get their dollar back, plus they'd make 200% profit on that $1 loan. Now, we've heard of people having their credit card rates jacked up to 30%. Well, $1 at 30% is 30 cents a year in interest. That would be 6 nickels. And the people managing your money and your retirement and pension money would come along and they would pay the money changers on Wall Street $1, $2, $3, $4, $5, $6 for 6 $1 5% sucker bonds backed by a $1 loan that was making 30%. Get it? So they were making a killing. They didn't care about the nickels there. They were looking for these dollars. They figured out a clever way to rip you and your parents and grandparents and everybody else off, and to get all this money, put it in the kitty, pay out huge salaries, and then at the end of each year pay out billions and billions and billions in bonuses. And they did it for several years, and that's how they stole trillions of dollars. The credit default swaps and AIG and all that, those are side issues, but this is what they call structured finance, and that's how they ripped us off. Now, if you don't consent to being ripped off, there is a remedy. Now, I'm holding the remedy in my hand. It's a little book, fits in my shirt pocket, and I carry it with me every day. This book has very powerful ideas in it to stop this game. And the power of it is that it has powerful ideas and a plan to make that a reality. And we can change history forever and stop the money changers and politicians and judges from ripping us off. It's that simple. Now, if you want more information, you can go to the website RIGHTtoCONSENT.com, all spelled out, and you can get more information. Now, bear in mind, the original colonists did something similar. They had a powerful idea and a plan, and they shared the idea with their friends and neighbors, and they left them physical reminders, which is much more powerful than just seeing something on the internet where when you walk away from the computer you forget what you read or saw. So people would carry these reminders with them, and they'd show them to their friends and family and neighbors, and that's how they ignited the American Revolution in 6 months. They woke up 2.5 million people living over an area of 360,000 square miles in 6 months. Now, if you want to stop this, we can do it, but we have to do what we know works, and that is have a powerful idea and a plan and a physical reminder, carry it with us, and talk to people and show them the physical reminder. If you like what you've learned in this video and you'd like to see more, click on the yellow subscribe button on your computer screen and send the link to all your friends. Together, we can stop all the looting and corruption. I'm Will of the People, and I approve this message, and I bet you do too.